Hey guys, so for today I'm going to go over the different types of funds that you can look into. One is called a value fund and another is called a growth fund, and when to buy them and what are the differences between both. So, one of the reasons why I wanted to bring this up is for those of you guys who may not know, the Mag 7 stocks currently comprise of almost 40% of the S&P 500. And the reason why that's a bit of an issue is because just 3 years ago, they only comprised 20%. So beyond a lot of current market sentiments and a lot of news, essentially that means that your fund portfolio, if you're heavily put into that kind of investment mix, you're not well diversified. And I wanted to share the importance of looking at a value fund, why it's important, and essentially how that can help you guys. So, one of the funds that I kind of wanted to share here is from a company called Capital Group. It's called a Capital Group Dividend Value ETF. Ticker symbol here is CGDV. If you see here, number one indicator of a slowing economy doesn't mean that we're going into necessarily a bear market, is look at the year-to-date returns. It's done 20%. So now if you look at the year-to-date performance, and then right before I get into that, the other thing to pay attention to is the yield. So this is basically the annualized interest rate that you can get from your portfolio. If you had X amount of money in this, that would earn an additional, on top of the investment returns, you would also get a 1.4% yield. So what are some things to pay attention to here? So this fund has been around since 2022 February. So it's only about 3 years of overall performance. The 1 year performance at the S&P 500 has done 15%. This has done 20%. So it's outpaced it. So that's a good benchmark. 3 years it's also outpaced it as well. But looking at the lifetime performances, I don't really like to look at that just because of the fact that you're kind of looking at something that I think lifetime performances are better judgments over at least a 10-year spread, at least longer. If funds have been around for 20 years, it's usually a stronger indicator, but you want to be relative, right? So if the past 3 years that we've seen a very strong bull market run, you want to compare the investment returns to that. So obviously this has been closely aligned to that overall performance. Obviously it's outpaced it, so this is a good fund. So the other thing to pay attention to know if it truly is a value fund, is to look at something called PE ratio. PE ratio has a very, very, very long explanation, but the simplest thing to just describe it as is just the overall earnings of a company compared to its overall market value. The fund in of itself, typically speaking, if it's a value fund, is going to be under the index. So the S&P 500's PE ratio is 22.9. This fund is 20.5, so it's less. And now another component of paying attention to how much it actually is you have to look at the holdings. So when you look at the holdings, if you see here, Mag 7 stocks are going to be comprised of a very large holding, a very small percentage. So if you see here, NVIDIA holds 6%, Meta is another 2.5%, and I'm going to keep going on and on. And eventually, if I add up all the Mag 7 stocks in this list, even if they don't pick all of it, I'm assuming it's at least 15%. And the rest of it, if you see here, Starbucks, JP Morgan, AIG, a lot of financial institutions are going to be in the play, especially insurance companies. Insurance companies are really great stabilizers in terms of the overall economy, just because of their, so to speak, prudent strategies. If you see here also Royal Caribbean Cruises, they're known for their value approach towards vacations on cruises. They're not a luxury kind of brand. They try to sell that, but really what they are is more about giving you more bang for your buck. So a lot of those companies are going to do really well, but you don't want to be out of the Mag 7 or any type of growth vehicles, growth companies, I should say, because generally speaking, when there is a rebound from a slowing economy, growth stocks are going to do well. So you don't want to be underweight in those areas to the point where you're basically zero. But you do want to have some of it, so when the rebounds do happen, you have the opportunity to grow your portfolio. So how is this different from a growth fund? So one of the things to pay attention to is, so this is another fund from Capital Group. It's called CGGR. And if you see here, once again, this it could be different fund to fund, but this is just generally the trend that I see. But yeah, if you see here, the 1 year performance, 17%, and the yield 0.11. So obviously this is more towards a growth. It's not really about the interest that you earn from it. This fund's been around same time, February of 2022, so about 3 years of history. If you see here, the 1 year performance still outpaces it, still outpaces the 3 year average as well. Very strong fund. Here's the big difference. Obviously, the PE ratio for this is going to be at 25.7 compared to 22.9. So how do you know that this is also a growth stock, growth fund? You're going to look at the holdings. If I calculate all of the holdings by percentage, it is probably going to be, if you see here, Meta, Tesla, Nvidia, Microsoft, if I add every single one of them up, it's probably going to be at least like 30% at the minimum, 25 to 30. So generally speaking, this is still good if you feel optimistic about the markets. If you want to be diversified and buy both funds, by all means. But generally speaking, I would ideally look to have a smaller holding. I think that's going to be a little bit better. So I would personally look more towards the value approach. You're still in those growth stocks, just a smaller percentage. You're diversified across other types of value stocks. Once again, this is kind of a slowing economy. Generally speaking, these types of funds are going to do way better during these types of periods. So anyways, I hope this helps. This is just some simple tips. I'm going to go over some other types of funds in another video. But yeah, let me know if this is something that makes sense to you guys. And hopefully you guys can start doing this with your investment strategies. Okay, bye.